As a long-time new watcher on YouTube, here's what everyone's been asking me lately. Here's the million-dollar question. How long can NIO survive? When will cash flow issue hit? Is Li Bing's claim achieving quarterly profitability by the fourth quarter realistic? Can launching 9 products in a year outperform Xiaomi's 1? Based on NIO's first quarter 2025 financial report, is this really a buying opportunity or just a value trap? Hi my friend, I'm Sheila Wang. I'm here to update it on the most cutting edge in the fresh business and investment information for you. So don't forget to smash that like button and subscribe my channel. I also welcome you to join the discussion in the comment section below. Alright, NIO fam, buckle up. Firstly, let's dive into their first quarter earnings report.
3rd of June, NIO released its Q1 2025 financial report, and let's break down the key points. 1. Net loss attributable to shareholders. A whopping loss of 6.8 billion yen, slightly lower than Q4 2024, but still the second highest quarterly loss in the company's history. 2. Shareholder equity. Down to yen minus 270 million. This means the company has entered a state of insolvency for the second time since 2019. Not exactly a comforting sign for investors. 3. Cash and cash equivalents plus restricted cash. A decrease of 13 billion yen compared to Q4 2024, while accounts payable only dropped by 3 billion yen. That's a massive pressure on repaying supply chain debts. So, here's the million-dollar question. How long can NIO survive?
Let's clarify what not surviving means. So what does it really mean a company can't survive? Take NIO for instance. It's currently a negative asset state. Yet, we haven't seen it collapse. Why is that?
The answer is simple. A cash flow crisis is what truly leads a business to its demise. Being insolvent is something that can be managed for a while. Imagine a person with 5 million yen in cash, no other assets, but 10 million yen in debt. If their payment deadlines haven't arrived, they can still live comfortably for some time. And since they're not a public company with financial statements, creditors might not even know they're in trouble. It's only when the deadlines hit and creditors come knocking that the truth about their negative assets gets exposed. At that point, they have 2 choices: become a deadbeat or negotiate a delay with creditors.
Now, what we understand the definition of not surviving, let's dive into 2 key questions here. The first question is, how long will NIO's insolvency last?
Looking at the past 9 quarters, NIO's average quarterly loss sits around 5 billion yen, with the last 2 quarters showing a worrying acceleration, 7.1 billion yen and 6.8 billion yen. If we project this trend, NIO's net assets for Q2 could hit yen minus 5.27 billion. However, NIO raised about 3.7 billion yen RMB from a new stock issuance in April.
Is there a chance NIO can secure more funding? I think there's a possibility.
I think there's a possibility, as the company has shown strong fundraising abilities in recent years. For instance, over 20 billion yen from the Abu Dhabi Fund in 2023. But here's the catch. After multiple rounds of funding, Li Bing has gone from being the major shareholder to the second biggest. The Abu Dhabi Fund, now the primary shareholder, is likely not thrilled about continuous equity dilution. Plus, the electric vehicle market isn't bursting with the same excitement as it did in 2019 to 2020. With fierce price wars and a trend toward high-spec, low-price models, growth rates are no longer astonishing. While NIO might secure some small funding to ease its balance sheet pressure, substantial relief seems unlikely.
Second, will a cash flow crisis occur?
Let's take a peek at the balance sheet. Cash and cash equivalents, plus restricted cash, plus short-term investments, can give us an idea of readily available cash. In Q4 2024, that figure was 41 billion yen, but by Q1 2025, it dropped to 25 billion, a staggering evaporation of over 16 billion yen in just 1 quarter. On the liability side, short-term debts, were 55.7 billion yen in Q4 2024 and 54 billion yen in Q1 2025. This means that over the last quarter, while cash decreased by 16 billion yen, debts only fell by 1.7 billion yen. The liquidity situation isn't looking great. You can't help but worry for their suppliers. Considering that consumed about 14.3 billion yen in cash in Q1 and taking into account new funding in April, their cash reserves for Q2 might stand at 29 billion yen, enough to last for 2 quarters, extending into Q4 2025. Now, is Li Bing's claim of achieving quarterly profitability by Q4 realistic? Let's look at his assumptions. Monthly sales of 50,000 units and 30 billion yen in revenue, with NIO's brand hitting 25,000 units per month and the other brand, Ladao, reaching 20,000 units. However, with the upcoming launch of Xiaomi's YU7 in July and competition from the Li Auto 1.8 and i6 in the second half of the year, NIO faces a tough battle. Achieving 100% sales growth compared to May seems like a long shot. As for Ladao's sales, 5,912 in the 4th of January, 49 in the 4th of February, 820 in the 4th of March, 400 in April, and 6,281 in May. The L60 model averages around 5,000 monthly sales, but recently it's been reported that the L60 will partner with Didi for ride-hailing services. It's uncertain how consumers will react to this shift. Clearly, the company is banking on the L80 and L90 SUVs. But the market for mid to large SUVs is heating up, with competition from established players like Li Auto's L8 and L9 and new challengers like Denza's N9 and N8L. The real challenge? Most of these competitors are using hybrid powertrains, alleviating range anxiety. In contrast, the L80 and L90 are fully electric.
Last question. Can launching 9 products in a year outperform Xiaomi's one? This question is pretty complex, but looking at the differences between Apple and Samsung can help us draw some conclusions. The iPhone is essentially one product, even though it comes in standard and Pro versions, plus different sizes. Most of the components are shared, but having multiple products brings its own set of challenges. Looking ahead to mid-2025, is it a good time to buy the dip? First off, I believe 2 conditions must be met for buying the dip to make sense.
1. Short-term cash flow issues must be under control. The company needs enough cash on hand to weather the storm. 2. The company should have the potential to become great. It should be facing solvable problems, not insurmountable ones. Based on my analysis, I'm inclined to think that this year is unlikely to see a catastrophic collapse.
Now, the crucial second question. Is NIO a great company that facing solvable problems? So what defines a great company? It's very important here. In Good to Great, Jim Collins highlights one characteristic, the pursuit of profit above all else. Steve Jobs and Apple could perform this trait, right? Is NIO differentiated enough? Sure, but are consumers willing to pay for it? Some are, but competition has diluted its interests, leaving the overall demand insufficient. Alright friends, we can quantify a lot from financial reports, but many future developments require a bit of intuition. Whether or not to buy the dip is something you will have to weigh for yourself. Lastly, on an emotional note, I genuinely hope that China's high-end smart EV brands thrive. But rationally speaking, I think it will be tough for NIO to survive this year. If you are a value investor, make sure to consider the risk involved. Well, that's all for today. See you next time, my friend.